news. So if I don't get a chance to do that, then I always forget to turn the live feed on. Anyways, welcome to the show, folks. Jason Bible. Rob will be here in just a little bit. I don't think he's enjoying the school's back traffic all the way from Cyprus. So, which is okay because I keep telling him, like, hey, man, there's some great houses in Memorial. There's some in the Heights. You can always move. When you're a real estate investor, let me back up a little bit here. When I first became a real estate investor, and I started going to the classes, much like most of y'all do, right? You hear the come out for the weekend seminar. And here's this big weekend seminar for $97. And or maybe it's a free one, or you pay to be a member of some club. And you're sitting there in the room and you're trying to figure real estate out. And my first thought was, even if this real estate investing thing doesn't work out, if I can figure out how to get a big discount on my personal residence, that would be a huge, I shouldn't say huge, should be a huge win for me. So that was one of the things I was like, if being a landlord is not for me, if being a lender is not for me, at least I can figure out how to, buy real estate inexpensively. So when I go and buy my personal residence, I can, pay less for it. If I go and buy a beach house, I can figure out how to pay less for it. So that was always the mode I was operating on for years is even if I can't figure this real estate thing out, maybe I can do it at least once or twice, in a couple of years when I'm buying my own residence. So in any case, I get stuck and I start reading the news in the morning, so the news feed comes up a little slow. But today we are talking about the wrap up from the Quest Expo this weekend and kind of all the crazy stuff that's been going on as a result of the yield curve inversion and negative interest rates. If you guys are looking for additional information on any of this sort of stuff, I'm posting multiple times a day in the Mr. Texas Real Estate group on Facebook. So if you just go to Facebook, type in Mr. Texas Real Estate, it'll say Mr. Texas Real Estate, Jason Bible, and Robert Orfino. Just ask to be a member of that group, and then when I get around to it, I'll add you in there. But we're already over 1,000 members in less than 2 weeks. So if you guys want to jump in there, I will put short little comments. I'm trying to think of the best way to put it. I'll just put like a little sentence or two,
blurb.
A little blurb about the article, like, hey, this is why I think this is important, and then you can read it if you want. But instead of trying to sift through all the financial news. But there's going to be an article that gets posted today, I believe it's 2 or 3 years old, where it talks about the impact of quantitative easing and negative interest rates for real estate in Europe, and I believe it was the UK or France. Basically, what they found is as soon as rates went to almost zero, real estate increased in price by 16%. Right. So if you think real estate's expensive now, just wait. And we were just listening to Bloomberg before the show kicks on, Bloomberg radio, and they had this high-powered bond expert, and she said, it is likely you will never see rates higher than 3 or 4% the rest of our life, meaning treasuries or bonds. You will never see that above 3% the rest of our lives. She said, actually, the best time to have bought all that stuff was in the middle of the crash because there were some 3% coupons out there. But she said it's not coming back. Ever. So when folks tell you, oh, well, interest rates have to rise. No, actually, they don't. They really don't. It could be free money forever.
So again, what we've been talking about over and over here for the last couple of weeks. What does this mean to you? It means that when money gets really cheap, the price of real estate goes up.
Yes.
And that for us as investors, our struggle is not going to be money. That was last time.
Yes.
The last crash, we couldn't find money. There was no money. There were tons of deals, couldn't find money. We expect it to be just the opposite. There'll be tons of money and no deals.
That's right.
Because people will run to real estate as a safe haven, if you will, and just basically because it's cheap.
Yes.
You'll have really cheap mortgages and people will move back into that space.
I'll give you a great example of this. I put my truck has almost 30,000 miles on it. It's not even a year old yet. So I spent a lot of time driving around the state and driving around the city. And I'll tell you this, jump in your truck today, go drive around even to what you would consider, quote, the worst parts of town, and tell me how many of those apartment complexes have been renovated in the last 5 years. Right. So this is the next, for real estate investors, this is the next crisis. there's nowhere to put the money.
Right.
So here's a natural law of investing. It's a teeter-totter. There's money and there are deals, and they're always in some kind of back and forth. They're rarely in equilibrium. So right now we have a preponderance of money and a shortage of deals, and I think that's only going to get worse.
Yeah, and you're all seeing it now because there are a ton of hard money lenders coming out of the woodwork.
Mm-hmm.
Right, they're all over the place. Hey, did you heard of this guy and this guy and this guy? And they'll do 1.8%.
Mm-hmm.
We're getting introduced and invited to go speak to banks who are telling me now 5%.
Yes.
On apartment buildings, which is amazing. And so this money is being pushed out there because there's a fear that if we just leave it in with Treasury in the market, in the places, it's not going to grow as fast or it's not as safe as real estate. And so when big banks start putting money on the street, that's when us little investors get pushed out. It's really that simple. That happened in 2012 in Los Angeles. I saw it. Blackstone and Colony came in and bought over 6,000 houses.
Mm-hmm.
And everyone in the middle of the recession, it still hadn't gotten better, couldn't find a deal.
Mm-hmm.
The money finally hit the streets 2012, 2013, all that pent up, and it came running out there and they just bought everything.
Yes.
And already, we had our showing on Friday.
Mm-hmm.
By the way, we haven't quite got an EMD yet, but we've got 2 competitive offers now. So
I saw another email, and then your wife gave me a business card to email this gal. So I'm like, so those houses sound like they're gone.
Yeah, we're getting pretty darn close.
Okay.
Would really like an EMD check today.
Give me a check.
But anyway, California guy.
Yeah.
Yeah, he's got a fund coming out, scraping.
He's just scraping, build new.
Scraping, build new. Yep.
Oh, because those are all contiguous lots. Mm-hmm. So he's going to build big, beautiful homes next to our duplexes.
3 townhouses, maybe squeeze 4 in. Yeah.
Squeeze it. Oh, that's right. He's doing just squeeze it in.
Squeeze it in. And I thought the play was, and one of the things was, you could just rehab the home the cheaper way.
Mm-hmm.
Oh boy, I forgot her name. She's going to be mad at me. The genius was rehab the home.
Yes.
So we're getting at whatever and put $40,000-$50,000 in. And because the lot's big enough, build a garage with an apartment above it in the back.
Yes.
I was like, oh, that's genius. You could do that for about $30,000. So you could be all in at 70 and still have your 1,200-1,400 2-unit on there.
So let's say you're in for 70, we sell it for 150.
Yeah.
So you're in for
220 with a duplex in Edo.
Yeah, that's.
I'm
sorry, Eastwood. Oh, God. I have to call her today. Okay. I think I'm going to call her Eastwood from that. That's her nickname.
Eastwood.
Her nickname was Eastwood.
Clint. No, Clint.
We're going to call her Clint?
We're going to call her Clint.
I'll call her and tell her that today. I'm like, you've
What's
officially been on my to-do list here for 2 weeks now, so you get a nickname, Clint.
Clint. There you go.
We have nicknames for everybody, by the way. So folks that we work folks that have something quirky about them, let me put it that way. Okay,
but that's kind of what's going to happen is it'll be tough to find deals.
Yeah.
2013, economy is still rough, and nobody can find a deal in Los Angeles.
Yep.
Because 6,000 were just taken off the street.
Which, as big as LA is, you got to think how many more rental properties there are there.
Yeah.
Condos, townhomes, apartments than there are single-family homes.
For sure.
And that's in a gigantic market.
There's 3.2 million residencies in Los Angeles County.
That's crazy. Mm-hmm. So, in Houston, Texas, for those of you who are real estate investors, brand new investors just getting started. Well, I'm not sure. I mean, here's the bottom line. You really want to get down to brass tacks? I'll get down to the bottom line. And I'm sure sometime this year I'm going to speak at the Redneck Country Club, and I love asking this question to an audience that size. It's just because I'm looking for the detractors. I'm looking for, it's kind of like a wedding. You're at the wedding and somebody says, does anybody have anything that says this couple shouldn't get married or whatever it is? I always forget what they say. Nobody, you're like, oh, is that somebody going to stand up?
Speak now.
Yeah, that's right. Is anybody going to stand up? So I will get on stage and I'll say this. How many of y'all have been in real estate for over 5 years? There'll be a lot of people in there, right? And I'll say, great. How many of you wish you bought more houses? Everybody's hands go up.
Yep.
And then I'll say, okay, everybody put your hands down. Who wishes they didn't buy houses 5 years ago? Nobody raises their hands. None. 0. and I guarantee you it's going to happen again.
Yep.
We had a guy. I am trying to get him. I listens every day. We think the guy's fantastic. He's an awesome dude. I'm trying to get him to come in and do an interview, and I think we'll have to do a kind of masked thing so nobody knows who he is. But it was amazing talking about his portfolio because he had like 100+ properties before the crash, and he ended up losing them during the crash. And I said, what's the challenge? And he said, I've gone through the QuickBooks and all that. And he said, really my cash burn as the market turned over, meaning people he was getting out of the houses, he was releasing them, having to do a little bit of rehab, rents were going up. But there's even in the worst recession ever, it was about 18 months where even landlords were like, okay, well, I got a lot of portfolio churn, evicting people, all that other stuff. And he said, man, if I had just a little bit more cash to shoot over that last 6 months, and I think he said at the time, what did he say his portfolios were, 10 or 12
11 million.
11 million. And I said, what about now? And he said 20.
Yep.
So the reason I'm telling you guys is even during the crash, it's not that bad. 08, 09. Right. If you can shoot that gap. Now, if you're a flipper, if you're a developer, you're going to bankruptcy. There's just no other way around it, right?
Yeah, developers.
You're going straight to bankruptcy. And probably want to just
never believe. The developer never believes.
That's
the problem.
Yeah. Oh, it can't be me. I'm so smart. I got a Lambo.
Just a gully. A gully.
You're exactly. We'll just zip right out of it. All right, we'll get back to the break. We'll do Quest Expo wrap up and talk more about rates. Jason Bible, Robert Orfino, Texas Real Estate Radio Network. Are you talking about that email that Jimmy sent?
Mm-hmm.
Okay.
It's $10,000 off. Just gotta pop that 4 number. We're good.
I mean, I like $150 a piece.
No. Only the middle one is worth $150. It's 1,100 square feet. The middle one.
260 plus 150. 410.
Morning, Johnny. Michael. Lindy's watching.
So,
1 minute.
Do you just want to put them all in an email and say, hey guys, highest and best offer today? What do you want to do?
Yeah, because we want to list it. If not.
Okay. Oh, what is this? What? My RIA group. Or my group.
Who's that one?
I don't know.
How many?
Information.
Go get it.
All the insurance paperwork. And make sure your supplies are delivered directly
there you go.
For free.
Call U.S. Medical Supply 24 hours a day. 888-303.
Oh, it's in Pasadena.
9136.
Yay! Just got a new RIA.
Kick out the old one now.
Who's the old guy?
I don't know. See how many organizers? Oh, just one? Good.
Yeah. Yeah, it was the last time they had a meeting.
One member.
1 of 10.
Going online.
Well, look, I mean, they got
All right,
photos.
Hey, we're back. So I did a little moving this weekend. Had to move a couch.
That was fun, wasn't it?
Yeah, a lot of fun.
So we decided the last minute, Thursday, I think, to take our office furniture for our what do we call that?
It's the reception.
The reception area.
Yeah.
We took the entire reception area to the Quest Trust event and set up like a living room in the middle of the conference. It was the best booth ever. I just couldn't sit in those conference room chairs or the upright steel chair. I just didn't want to.
It was a little steamy back in our area.
Yeah,
a little hot.
Got a little hot back there.
Not a little lack of ventilation there.
Yeah, but anyway, so I think we had the best booth, and then I started thinking about next year what we're going to do for the booth there. That's going to be pretty cool. So we had We had a good time at the Quest Trust event. Got to meet a lot of you guys. Thanks for coming by. I sent an email out last night and I said it's good to know that's more than just Rob and I's parents that are watching the show.
Yeah.
There's a couple of y'all out there that
I don't even think my dad does.
no, no. So it was good to meet a lot of you folks. A lot of investors and lenders want to meet with us this week.
Yeah.
So if you guys
Be
are
a good week.
and it's going to be a crazy week. So if you guys are interested in partnering with us on Airbnb properties, on our hotel, any of the other sort of stuff that we got going on.
So the hotel's hot. So we're just about ready to wrapping up the prospectus.
Okay.
Got to go through that. We got to sit down, you and I, go through and just tweak the language a little bit. But we're excited about that.
Okay. So if you guys are interested, at 281-401-9008, 281-401-9008. If you want to dip your toe in real estate investing and put some money to work, just send us a text message and we'll put together a little meeting, have a conversation. So a good weekend. You got to sit on a panel. When I walked into the room, there were like 30 of y'all on that panel. I was like,
it was a
holy
pretty big
cow.
panel, yeah.
Were they just trying to fit, try and get an entire stage worth of a panel there? Is that what was going on?
It was all right.
Yeah.
It was fine.
I just walked in. I was like, whoa. I didn't know there were that many people doing Airbnb.
Well, I think there was probably 3 of us, and then the rest were not, and maybe 2 like actively against it.
Oh, there were 2 haters, huh? Well, why didn't they want to do Airbnb?
Well, it requires work.
Oh, that's right. I did. One of my favorite terms that people throw around is, mailbox money. Just shows up in the mailbox. It's so easy. It's just mailbox money. Like, I don't know.
I don't think any of our investors want to give us their money to work with or loan us their money because we're lazy.
Yeah. That was pretty funny. There's a couple of folks that I heard throughout the weekend. They're like, yeah, I'm real lazy. I just do this and this. And, the mailbox money. Oh, can I borrow your $200,000 out of your IRA to go do this deal? And you just look at them and you go, no, you can't.
All right.
I don't want to give lazy people my money.
I'm like, man, I hustle so much for people. I was like, I wish I could get to that mindset where I feel it's okay to take other people's money and be lazy with it.
That just doesn't sound right.
It did not come off right.
Mm-mm.
Yeah. Anyway, so that's not what we do. We worked our butts off to find good deals and help folks out. So the panel was fun, though. It was good. I've never had a real long conversation with Michael Plax.
Mm-hmm.
So he's an interesting guy, and he was appreciative of what we do, and he's clearly a really smart guy when it comes to taxes, right? So
I think what makes Plax really unique, he's a CPA here in Houston, very active in the investor community. He sees a lot of people sign up for the real estate guru and, they pull money out of their 401k or credit cards and all that. And then, then here it is at the end of the year. Now, what is he supposed to do with it? Right. It's like, they spent all this money on quote the business and they never really got started. So he sees it.
And they didn't even start an LLC, right?
Right. Yeah, exactly.
And that's the one that gets you.
So there's all kinds of crazy stuff that I think the accountants and the attorneys, you had an interview with Jeff Watson.
Yeah.
And Jeff and the CPAs and the attorneys see a lot of really crazy stuff. So it's always fun to have those guys at your events because you can say, okay, well, they're the folks that see the end product, if you will, of all this real estate guru-y education stuff.
I don't even want to go there. We'll do that tomorrow.
Yeah.
We'll do it tomorrow because over the last less than a week, some revelations came to us, and I was just like, I can't believe that.
Yeah.
And then I did a little research, and I'm like, oh, no, not good. So maybe we'll talk a little bit about that tomorrow, but it is so important you do your due diligence.
Well, this is why we started that private lender summit, where we basically said, hey, lenders, y'all are doing stuff you shouldn't be doing.
Right.
Like, here's how you need to protect your principal and protect yourself legally from borrowers. Now, the flip side is I've seen lenders do some wild stuff to borrowers just because they're not educated. But
I'm just, it bothers me that there's this sort of it's greed now.
Yes.
It is greed when I hear people talking 12, 13, 15, 18, was a guy there talking about 20 and 40% yields, and I'm like,
No.
come on, man.
No way, dude.
So, not that I have a ton of investment dollars,
Mm-hmm.
but my dollars go to a hard money lender in New Jersey,
Yeah.
and he gives me 6.5%,
Mm.
and I'm happy.
Mm-hmm.
I trust him. He's got one of the smartest little deals that he does, and that's it.
Yeah.
Here you go, Henry. It's $45,000 in a Roth. Go grow it.
Yeah, go grow it.
Yeah, here you go, Robert. Thank you.
Well, it's amazing. If you want really large rates of return, you got to work for it. It's not going to be passive.
Really hard.
You got to work for it. Like this, of course, we're talking about the Ito deal. We're going to do really well on that thing. But we also spend a couple hours a day doing real estate. Not a passive pursuit for us. In fact, I'm driving tonight. For those of y'all in Austin, I will see you at the Quest Trillionaire Mixer tonight, Austin, Texas.
Yeah, so I've talked to a lot of folks there, and a lot of people want to get into it, right? There's a lot of new investors there, right? Trying to figure it all out, understanding it, and then there are a lot of people just looking for money in that crowd, right? And there's a big whiffs of desperation as you walk by. So like, oh god, it's really scary.
Mm-hmm.
And again, it's really scary when you hear the names that you hear, and you're like, hey, I know that guy, or
Yeah.
Hey, I've heard that name over and over. That guy ran a RIA club. Are you kidding me? Right? So I understand, and I understand from the other side because we've had some bad communication problems on our side. We've taken care of them, but man, holy cow! There's a difference between being a bad communicator to your investors and fraud.
Oh no, there's some real weird stuff going on out there.
Anyway, we'll talk about that tomorrow. We'll try and clean all that up tomorrow. The event was, and I don't want to shout, it had nothing to do with Quest, right? So the event was fantastic.
When you get that many people in a room and everyone starts sharing stories, then you're like, whoa, that happened? Oh yeah. And then this other guy goes, that happened to you too? And you're just like, oh geez. But
the guy was there who runs the wholesale sweatshop.
Oh, was he?
Yeah.
This is where you can come in and work for free?
Work for free.
You come in and work for free.
No, you pay him.
Oh, you pay him?
You pay him how to coach, and then he takes portion of your deal.
Oh, that's great.
Yeah, he's not the only one who does that business model.
Is this the guy that calls you and says your house has been sold? Call me back.
No, that's someone else.
Oh, that's somebody else.
Another guy. Oh my god. Jeez. Yeah, I saw that sleazy motherfucker there. Like, fuck, you're here? Why don't you pay me? I'll be your guru, but then I'll take a piece of whatever you make on the first 6-7 deals. Have you heard that one before?
Yeah, yep.
I'm like, you gotta be fucking kidding me. Fuck you.
I'm trying to find this article.
So how many times are you sharing this show right now?
I put it across all your pages.
Just our groups. Because I'm in a lot of groups. So you got my webpage, my Facebook open? So you just go to groups. Yep. Not all of them, but anything that's rough, Houston, real estate, that type of thing, yep. So you should be putting these things out to about 10 to 15 outside groups every morning. And then I was late because I was reading Bigger Pockets this morning.
Oh, you were just itching for some brain damage, huh?
It was not good.
I think picking up a meth habit is probably better than reading some of that stuff. I can only imagine what it's like now. I mean, back in the day, there were some good guys I could follow, but it's got to be so much noise at this point that
It is, and it's hard because like I'm reading this whole thread on our buddy there, and there's 2 or 3 really salient moments, like just really thoughtful, insightful. I'm like, oh, that's really smart, and we need to do this. So one of them is guys like I run background checks on anyone I give money for. I'm like, yeah, run them. Yeah, sure. Nothing anyone's gonna. So I was like, oh, that's smart.
Yep.
I don't think if you're borrowing money from people, you should have no problem giving all the information that 1 minute Prosperity Bank asked me.
Okay.
Or Charter Bank or Wells. Or Geo's Banks when we get there on Wednesday, right? You should have no problem giving everyone that information. Right now, not my social security number, but they want to know what how many properties we own. We can give them. We're not giving the exact address, that type of thing. But if you want that level of detail, it's just not at 12 and 15%.
Right. Yeah.
It's like, hey, man, we'll provide everything. That woman across from us on a booth, she was 6%. 6% with a 25% waterfall. Stone, yeah.
Wow.
6% with a waterfall.
10 seconds.
And then the guy all the way around the other side, he was talking nonsense numbers.
Yeah. All right, can we get a little nerdy here for a minute, because this is really important. I was reading a bunch of articles this weekend and last night. Yesterday I went home, turned on, got the music going. I'm sitting there reading through a bunch of financial articles, and let me explain a little bit about the world of finance and Wall Street and capital markets and mutual funds and ETFs and all that other stuff. Those entire worlds were built on a handful of financial modeling theory. And some of these guys that develop, academics principally, some of these guys went on to win Nobel Prizes in economics and mathematics and all. A lot of it comes from physics and from statistics and all. So your portfolio, if you've got somebody managing it for you, was built on math intended for something else. And then they kind of overlaid it on finance and investing. And so there's a handful of these theories out there. And so I'm reading this article here yesterday, and it's absolutely fantastic. And I'm just going to read this one little paragraph, and I'll tell you what it means. Much of the literacy and the modeling in finance over history assumes rates to be floored at 0. None of the founding fathers of economics and finance had to deal with this shape and form of market economy. It follows that we cannot reach out easily and comfortably to work with Keynes, Smith, Candleton, Friedman, nor the pricing models of Cox, Ingersoll, Rawls, Black-Scholes, Hull for guidance. What's the value in modeling the term structure of interest rates today? Similar to portfolio management tools like capital asset pricing model, modern portfolio theory, value at risk, risk parity, etc., in a world of negative interest rates. Meaning that all of these financial tools, all the models, all the guys that have Nobel Prize, like literally the smartest people in the world in finance, all of their models break down at the zero bound layer. Meaning we have no idea what any of this stuff is worth when interest rates go negative.
Right. That's the old Jim Rome line. Used to be you just lost it all.
That's right.
Now you just keep sailing right by zero,
just
right?
Zip past zero, right? So now we've got all these financial models. You're meeting with your money manager guy, right? Oh, we're going to do this, we're going to do that. Well, how does modern portfolio theory deal with negative interest rates? So there used to be something called the risk-free rate of return, and it's critical in a handful of these models where it says I can go buy treasuries at 2%, or I can go and get inflation-adjusted treasury tips for like 1.5%, 2%, 3%. Okay. Yep. So I know my assumption is my floor is 3%. So I start at 3% return, and it's relatively risk-free. In fact, the market just calls it risk-free rate of return. So we start there. So how do I compare that to a share of Apple? How do I compare that, this treasury, to a whole basket of different financial products, including real estate? And so now we've got this problem. If interest rates are negative, what is all this stuff really worth? Do you see negative cap rates at some point? The cap rates get so low you're buying zero caps just to park the money.
Absolutely. It's already happening.
Yeah, in California
That's
it is,
Southern
right?
California,
Yeah.
that's Chicago, that's New York City.
Yeah.
Negative cap rates.
Which is insane.
Well, is it? Remember,
Well,
right? There's 5 ways to make money in real estate.
That's true.
You can wholesale, you can fix
Yeah.
and flip, you can buy and hold, you can lend, or you can go for depreciation.
That's right.
So if I have a lot of money somewhere else,
Yeah.
I buy negative cap rates. I don't care.
Right.
My money is safe because I have an 18 unit in Los Angeles, right across from UCLA. It's
Yeah.
worth $7 million.
Yeah.
And these are tiny little beat up apartments.
Mm-hmm.
Our stuff is better looking than that,
Yeah.
right? But it's worth $7 million, and I get the depreciation on the $7 million.
Yeah. Yeah. That's they start running the IRR calculations,
It has absolutely happened. We'll get Steven in here in October. He'll explain that market has been there for a very long time. Because people have a lot of money, and you've talked about it over time. We name the international markets.
Right.
Right? LA is an international market. Seattle's an international market. New York City, Miami, international markets. You've got people bringing cash from a lot of different places. And in the 70s in LA, which boomed all of that stuff on the west side, was Persian money. There's a lot of money came out before the collapse of Iran that ran to Los Angeles and bought a lot of townhouses and big homes and all this other stuff. And then, there's been an exodus of Chinese money and Russian money. And there's always this international markets drive down those cap rates so because people just don't want to lose it. Even if I just lose a little bit.
Right.
But, Donald Trump gives me a break on my taxes in the form of depreciation, I'll do that investment.
Yes. So this is where we're seeing a lot of this is obviously in China. In China, and you've got these wealthy Chinese that are looking around going, things aren't really working out that well right now.
Right, because their 8% was never real anyway, right?
Exactly.
So now if I can just get that money out of China, a realization, if I put it in American real estate, it is real.
That's right. And where can I pick American real estate? Well, a lot of my buddies are investing in Texas.
There comes Texas.
A lot of Chinese money here in Texas. There's a couple of brokers I follow on Facebook. Their posts are private. You've got to be friends with them. And one of them keeps talking about his Chinese clients. And he's like, they are literally flying over, figuratively, flying over here with suitcases of money and setting up manufacturing facilities here and warehousing operations. And so where's all that money going to go? It's going to come right to Texas. And if you think that zero caps,
first it comes to the United States,
right?
Democracy, safe, blah blah blah, safe as it can be, right? With opportunity,
right?
Capitalism, right? Not socialism. So you can look at Canada, but the problems there. And then we look around and say, well, where's the best place for us to deploy our money once we're in the United States? And then all of a sudden, Texas becomes a really big target.
Yes. Yeah, because they look at California and they go, oof, negative or zero.
No, can't do that.
Why don't I go buy a $7-10 million?
Oh, they'll live in California.
Oh, no, they'll live there.
They'll definitely invest here.
I can tell you, since I got back from Utah, I'm like, I don't mind June, July. It's like the tail end of July through the first 2 weeks of September. It's like it's the humidity and the heat. It's just awful. So, which is cool because I'm going to Austin today. So,
enjoy the lake.
Enjoy the hill country there. Have a little barbecue. It'll be a lot of fun. But
nice.
So
6-hour lunch in a winery out there.
Yeah. That's only when you take your SEC attorney.
That's right.
Did she send us an invoice for that with those billable hours? Like, this is the most expensive lunch I've been to in a while. Anyways, so when you look at negative caps and zero caps in California, that's got to come to Texas. It's just going to happen.
It hit Dallas first.
Yeah, it hit Dallas first. Yeah. All right, we get back from the break. We'll talk more about the Quest Expo and rates and what's going to happen in real estate. It's Jason Bible, Robert Orfino, Texas Real Estate Radio Network.
Michael, A waterfall is what's known as the back end part of the deal. So if I have a fund, I promise you it's a debt bonus system. I'll promise you 6% return, like that woman. She's going to 6%. You give me $100,000, and each quarter I'll pay off a portion of that 6% annualized, right? So you're going to get 1.5% every quarter on your money, $1,500, and you keep that money in there for 3, 4, 5 years. Everything's okay, and then she says, "Hey, I'm liquidating the fund, taking all the assets, and I'm going to go ahead and sell them. Right? I'm just going to go sell them on the open market. I'm going to refi all you guys out." But I don't want you walking away with a bad feeling. So what I'm going to do is I'm going to share some of that net profit in the fund. So an 80-20 waterfall means, she's keeping 80, you're getting 20, 60-40, she's keeping 60, you're getting 40. And some guys will say, hey, if you're in the fund for 3 years, you're 80-20. If you're in the fund for 5 years, then you're at 70-30. If you're in for 7, then it's going to be 60-40, right? So the longer you keep your money in, the more bonus there is. Here's the problem with that, right? One, as a person who owns the fund, you set yourself up for a lot of dissecting of, well, you could have been more profitable. Like literally,
30 seconds.
I have an investor in an Airbnb, and this person emails me and asks me what Wi-Fi I'm using because there is a cheap rate going on with an Xfinity. Like that. So imagine now you're in all that
10
stuff.
seconds.
Or what happens if the market crashes and there's no waterfall? Then you were expecting something and there's nothing. You can lose money in real estate, right? You will, and it will happen. So that promise on the waterfall becomes sometimes a little bit too much on the outside. Which brings me to the other point is, if we're just really, I don't know.
I don't like waterfalls on funds.
I'm going to tell you, the more I live in Texas, the more I realize that I actually have some conservative streaks in me.
Oh, yeah.
So, but here's the thing. I always believed in 7%. I always thought 7% was a good number, right? The rule of 7. I thought, hey, that's a good number.
Yeah.
If I can just get 7% on my investments, I'm happy. That's why I'll give it to
doubles every 10 years.
So give it to Glenn and just let it keep rolling, right? And so what happens is, because people are going to be pulling their money out of the stock market, because treasuries will be so low, there's now a competition for that private dollar, which we saw all throughout that expo, right? Everyone had a fund.
Yeah, it was all.
There was
funds.
Literally, Jason, a guy who opened a suitcase up and had all his materials. Like, he's walking around with a fund in his suitcase.
Oh, that's funny.
And he opened it up and has little pop-ups and his tablecloth. And I was like, if that was just made out of carpet, that would be the absolutely perfect device to carry your material here to. So what happens is, there's going to be competitiveness, right? And so, hey, what happens when overall the world has lower interest rates, right? And people still believe they should be getting 12 or 15% on their money? That's risk. Now 12% becomes risky, right? I'm thinking, hey, if I can get 7, double in 10 years, I'm okay.
Yeah.
And plus, I keep funding and it actually goes a little bit faster, and maybe 7.2 years. Very happy with that. But people out there who are looking for 12, 15, 18, hey, I know this guy, if I just give him $30,000 into escrow, he gives me 26% back. It's like, that all sounds absolutely crazy.
Yeah. Yep.
Just crazy. So what you wind up doing, what happens in this marketplace is people are running around looking for this golden goose, right? Who's 12%, 12%, 12%. We're meeting with banks. We have met with banks, and the number they keep saying to us is 5 to 6%.
Yeah.
5 to 6%. Now we're meeting with banks who are saying, and we'll do construction.
Yes.
So now it's like, well, okay, I've got a bank that does 5.5%, 6%. Why are you coming to my office and telling me I got to pay you 12% and 3 points?
Right.
I've been vetted by this bank. They It's like I got my checkup with them guys. You know.
Oh yeah, they know everything,
Yeah,
right?
everything. I've stripped me down naked.
Yeah, that's why I tell people don't dress up for banker meetings. 'Cause,
right. You're going to be dropping your drawers.
yeah, I mean it's not going to be a flattering experience, right? So
Right.
no reason to get all dressed up for that.
And so I think the good thing about those expos is there's people on stage with sharing wisdom,
Mm-hmm.
right? So that above all is why you would go.
Mm-hmm.
It's the wisdom that is shared, and then there's just some very clever ways to protect yourself and to, take advantage of every legal way to
Yes.
avoid taxes,
Yes.
right? But in this marketplace where capital is just losing its value, we have to be able to
So
say.
that's a very important. The way you said that's very
Mhm.
important. Capital is losing its value daily.
Yes.
What I don't think people understand is because these rates are getting so low, your money is literally being depreciated away.
Right.
Which is not that is not an economically correct term, but it's the best way to describe it. Your money is, you'll hear them say it, losing buying power. Your money is worth less every single day. Your capital you spent 25 years working your butt off for, you and your wife saving, driving the old crappy cars, not going on cool vacations every year. It is slowly rotting
I
right
think
now.
the guy who had the most powerful booth there
Uh-huh.
was the guy who had the non-recourse loans.
Yeah.
I think that was probably the most powerful booth because now you can take things in control, right?
Mm-hmm.
You can get a non-recourse loan, you can get a mortgage in your Roth or your 401k, and you actually go talk to the guys at Quest. They'll explain how it does.
Yeah.
I'm not a professional, blah blah blah.
Yeah.
Right, and then in that way you can go ahead and pick your targets.
That's right.
Right, versus some of the stuff the returns might sound outrageous, but you
Yeah.
put your money into an asset that's going to appreciate 4, 6, 7% a year over the next 5 years. You feel good about that.
Well, so let me explain. Let's go back to this little nuance because I hear this all the time, and it's people lying with math.
Yes.
They'll say you'll get a 40% return. I'm like, over what time period?
Yes.
Oh, I'll get 40. Yeah, so it's 4% a year.
Right.
Like let's put this on let's agree on the independent variable
yield or return.
That's right.
Right.
Yeah.
Yield or return.
Right. So you get these. Oh, you make 25% in 5 years. I'm like, oh, it's 5% a year.
Right.
What? And they look at you like you just pulled some. Wait a minute, how'd you know that? Was that what kind of magic? What kind of magic are you using? That's why I got to be honest. I talked to a couple
you hack
of
my computer.
Yeah, did you hack? Who told you? Have you been talking to my attorney? That's why I have a hard time sometimes going to all those booths. I like talking to hard money lender guys and that sort of thing. But when I start talking to some of these fun people, I'm like, oh my gosh, come on, man.
Absolutely, and but there's always risk everywhere, right? So that's a big thing, and there's just things that I don't know.
Mm-hmm.
I had a conversation about notes, like, oh, you should be doing notes. I don't know anything about notes.
I'm not.
I don't understand. You have a piece of paper that has attached to a property, but you've never seen the property. How do you know that the property is worth a piece of paper?
Yeah, and the notes you buy, there's some in, Illinois and Florida and
New Jersey.
Yeah, and you're like, I don't live in any of those places.
I got a call, and I was just happened to be visiting. I got a call from someone in California that said, hey, my buddy from Texas is in New Jersey looking at a property, and he's a little nervous that he bought this note and it may not be worth what he bought. Do you want to come down and take a look? Sure.
Yeah.
Favorite, right? So I drive down there, and I'm like, well, what'd you pay for this? And he's like, I paid $70,000. I'm like, okay, well, you paid about $60,000 too much. He's like, well, I'm going to go ahead and just sell this. Yeah. And I'm like, what?
Yeah.
It's like,
I'm going to sell this to some other note investor who doesn't know what they're doing. Right.
So that, I was like, so that terrified me. I'm like, man, I'm not doing notes. I'm going to have to go 3 years of education before I figure that out.
So I will just make here's my little soundbite on notes. When someone says, I'm going to get in the note, I'm a real estate investor, I'm getting in the note business. No, you're not. You're not a real estate investor. Right. By the way, you are now in the derivatives market. And they go, what does that mean? The mortgage derives, which is what a derivative is, derives its value from the borrower and the asset. You are now a derivatives trader. And they look at you like, I don't even know what that means. I said, exactly. So it's not real estate investing. It's just not. Until you take that property back, it's not real estate investing.
Yeah.
So
3 years.
3 years. And I'll tell you, the way you and I would do notes would be very different than how 99% of the people out there do notes. We just buy the packages and then sell off the assets we didn't want, sell off the notes we didn't want to the next group. Do it $10 million at a time, and that's how I do notes. I wouldn't do notes the way, we're buying 6 and we're going to do workouts and summer foreclosures and summer deed and loot. I'm like, I don't want to do any of that stuff. Learn taking people to foreclosure and learn all the real estate laws and in each one of these states. And
I don't want to
do any of that. Now I got a servicing company to contact the borrower, but I can't contact the borrower. It's all crazy stuff. And it's really hard. But the way I do it is I just wholesale notes, and then the ones I really want, which most note buyers don't buy, are non-owner occupied notes.
Of course.
Those are the best ones because that's what we buy Airbnbs around Florida. That's how you do that.
When someone comes, I get this. Listen to you and Jason on the radio. You know what you should do? Nope. Nope, I don't want to know what I should do. I'm just still trying to figure out what I'm doing today.
Yeah. Or I flip 6 houses. You need me on your show. I'm like, no, we don't need that either.
No.
We get back from the break. More of this excellent show. Jason Bible, Robert Orfino, Texas Real Estate Radio Network.
You guys really should do notes. No. I don't know anything about notes. Why wouldn't you do notes? I don't know anything about notes. Eddie Speed is here. Great. I don't know anything about notes. And I don't. Go ask Eddie how long it's going to take me to be proficient as he is, right?
Yeah.
Why would I want it? Why would I want to be anything I'm half-assed at?
I don't get it.
So, no. I've got almost 3 years in Airbnb, and I'm still figuring things out every day, right?
Yep.
We got, between us, 15 years of experience flipping houses.
Mm-hmm.
And we're still walking and going, wow, look at this.
Whoa, look at this one.
Right. But I like that article on Bigger Pockets. We should offer anyone can run a background check on us. I have no problem with that.
Oh, that's fun.
Yeah.
It's simple. Just call Elite Rehab Placement.
Shock made an interesting observation this weekend. So most real estate investors start out in this wide.
Yeah.
They do some notes, they do owner finance, they do wholesale, they do all these different things. And she said, what you guys did is you were real narrow for a long time, and then all of a sudden, now you're doing all this other stuff. And I said, that's an interesting observation, because now that you've gone down this one lane, now you can do these multiple things, right? But unless you develop that specialty early on, you really can't diversify.
It's hard.
It's very hard. It's too much to learn.
It's your last segment.
Yeah, there were a couple developers there. That made me nervous too.
Oh, jeez.
10 seconds.
Nervous.
What do you think we could build? What do you think we could build a 3-story atrium-style stick apartment for per square foot? Think we can do it for $100 a foot?
Close. Yeah, 100, maybe 110.
Think that include the civil engineering development work?
That's always the stuff that throws you.
Yeah.
Because once you get to that big of a piece of land, then you're really worried about stormwater and all that.
Right.
Stuff. I'd much rather do infills.
I'm trying to remember. We built, when I was at the University of Texas, we built an apartment complex, and I was involved on the life safety side, but really it was all the biomedical research stuff. And I'm trying to remember what we were at a foot. I'm looking at this Class A deal now, and I want to say new construction for Class A when they built it 3 years ago was $220, $275 a foot, $275 a unit, 1,000. I don't know how big the units are. I'd have to go back and look.
Over 3 stories?
Yeah. Oh, it's a tower.
Oh, yeah, of course.
Yeah, it's a tower.
Yeah,
it's
you're
class,
250 right there. Boom.
Yeah. I want to say it's with land. They said the current construction and land costs are almost $400,000 a unit, which is amazing when you think about it. I was running some numbers this weekend. Cost of construction and land in the close to your central business districts in any of the major markets in Texas have doubled in a little over 5 years. San Antonio's a little different, but when you look at the cost of construction, I'm like, guys, people are going to figure out if they have. Some already have, but investors are starting to figure out if I can buy nearly brand new construction. Let's say it's less than 5 years old for 10 to 20% discount to new construction. It's really hard not to make money. like just the replacement cost alone make it such that your competitors, even if they're in all cash, have got to be so much less expensive. Like their rates have to be so much lower than yours just because your basis is so much lower. So it's going to get to a point where maybe it is a 3 cap on a class B, that's 10 years old, but it's just been recently renovated. I mean, I could see that happening because you can't. What are you going to replace it with? The buildings are getting so expensive to build now, and the land's not getting any cheaper.
Yeah, well, the money's cheap.
Right.
I think what will happen is we'll go into recession because of the cost of money, and we'll come out of it with a real estate boom.
Yes. Oh, there is a real estate boom. That's one of the things we've talked about, right? My guys, the real estate crisis is not a crash. And I heard people say it this weekend. And then I had a couple guys come by our booth, and they're like, I'm waiting for the crash. And then the guys that listen to our show, Don was hilarious. When he sat back down, he's like, Jason, you're totally right. I've been looking at all this data. I've been talking to all these guys. And he's like, you are absolutely right. There's about to be a housing affordability problem. Stuff's about to get really, really expensive.
Yep.
I just looked at some numbers last night from 2000 to date. Houston's appreciating at 4% over 20 years,
That's nice.
including a crash in the middle of that. So 4% a year, and then it broke it down by neighborhoods. You know what the fourth neighborhood was? Most appreciation? Bear Creek.
Nice.
Which shouldn't be a surprise to anybody. Of course, Oak Forest Heights, all that, but that over there was doing real well. All right, guys. Thanks for listening. We'll be back on the show tomorrow. Jason Bible, Robert Orfino, Texas Real Estate Radio Network.
Oh, God. Thanks, everyone.